All right, much requested video. Should you buy, finance, or lease an automobile? Let's get right into it. Important disclaimer. This is a discussion about the calculations and financial implications of these options. Okay. Like with most people, what makes sense for you will often depend on your particular situation. And also, not everybody will have all options available to them. Some folks can't afford to buy cash, can't get a lease because their credit's not good enough. And so they end up having to get a loan, a high interest loan from a credit union or something in order to finance a car. Completely sympathetic and empathetic with the fact that not everybody has all the options. Sometimes not having all the options actually makes it clearer because you have fewer options. But let's kind of go through these different options. Let's imagine a hypothetical car. We will call the car let's call it a $28,000 car. Oh, but David, a lot of people can't afford that. I understand that. We're just picking an example. $28,000 car. It'll be a new car. You can't lease used cars in most cases. So we will talk about a new $28,000 vehicle. Okay. If you buy the car, what's the deal? Well, you just spend $28,000. We're going to ignore sales tax and dealer fees and this type of thing because they would just be equal more or less with all of these. You buy $28,000. That's it. You pay for the whole car cash. You have no monthly payment. You're not paying any interest. You own the car 100%. This gives you the most control. There's no bank. There's no leasing company. You can modify the car. You don't have a monthly payment. That's what it is. What happens with a car when you buy it? Well, there is depreciation. So almost right away in a normal environment, you buy the car and then there's some depreciation. The depreciation is higher at the very beginning. So with the new car, here's the 28K. You drive it off the lot and there's a big decline, but then it evens out. Okay. So cars tend to depreciate more slowly over time. So you buy new, you pay the 28 grand. The car is almost immediately not worth 28 grand. If you want to sell it, okay, maybe you can sell it back for, 23,000 or something like that. Depends whether it's private party or back to a dealer or whatever the case may be. Okay. If you've got a bunch of money, a bunch of cash, this might be an option for you. You also have to consider the opportunity cost of that $28,000. And the question really is, what would you do with the $28,000 if it weren't in a car? Would you put it in a savings account currently earning 2.5%? Would you put it in the market earning 7%? I put 7% twice. What I meant was 7.0%. What would you be doing? If indeed you would be putting the money, for example, in a high yield savings account earning 2.5%, you have to consider that you are, in a sense, paying 2.5%. Remember, an interest rate that you earn versus an interest rate that you pay, you have to think about it as the opposite. Paying a 7% interest rate is foregoing a 7% gain. Foregoing a 7% gain is like paying a 7% interest rate. So you've got that 2.5%. Maybe you care about that. Maybe you don't. Great. Financing. This is option 2 for owning the car. Financing could be you take that same $28,000 car, but you make a down payment of, say, 10%, $2,800. That leaves you 26, that's 25,200 to finance. Let me do some very quick math here. Car finance calculator. Let's assume, so the car is 28,000 and you're putting down 2,800. You're not trading anything in. Let's assume a 48-month 4.5%. And then your payment is going to be, what is the payment going to be? $574. Okay. So at 4.5%, 48 months, you are paying 576. I'm sorry, no, 574 per month. Okay. What about this option? What are the downsides to this option? Really, there are many. First of all, you drive off the lot and imagine that the car is worth $23,000. The day you leave the lot, you're already what we call underwater. You owe more than the car is worth. That doesn't sound particularly good. Over time, you also are going to pay a significant amount of interest. Listen, I'll be totally transparent. I think this is probably the worst option. There are now 60-month loans. There are 72. I've heard of 84-month loans on depreciating assets like vehicles. I don't like this option. But if you don't have the credit to lease directly from the manufacturer and you don't have the money to buy it up front, this may be your only choice. We're not really talking about particular cars in this case, but if you are in the finance choice, my recommendation would be don't finance a new car. Let someone else take the initial depreciation hit, get a cheaper car, right? Get the 6-month-old car that someone didn't want and get it for $23,000 rather than ending up financing more than the car is worth. But that's this one. And then in this case, what's the advantage? Well, if you had all the cash, right? This $25,200, if you finance the $25,200 at 4.5%, you could invest the rest and make 7%. Okay, it's a form of arbitrage. But in general, I don't like the idea of financing a new vehicle. Then you've got the option to lease. Leasing is essentially renting. Okay, leases are typically 36 to 48 months. Your payment is typically lower than if you were to finance the same vehicle. Now, I will be transparent. I'm a lease guy. Why am I a lease guy? People say, David, you own nothing. You pay, and then you owe nothing. That's absolutely correct. Why do I lease? A couple different reasons. Number one, if you are a business owner and the vehicle is for business, you have full tax deductibility. Okay? When you buy a car, you're limited to how much you can deduct. There's a special rule for vehicles over 6,000 pounds, super specific stuff. Don't really want to get into that right now. Full tax deductibility. Number two, you essentially have a new car all the time, which means your maintenance and breakdowns are going to be almost zero. Number three, you can just give the car back. You don't have to worry about selling it. You just give it back, and then that's it. You don't worry about listing it, trading it, or any of these different things. And the reason I like this is I was typically trading cars in every 3 to 4 years anyway, because I like to drive and try different things. Oh, but David, not everybody can afford that. I started the segment by saying that. It is absolutely true that you are ending up with no equity in the same way that when you rent an apartment, you end up with no equity. But you do have a car to drive in exchange for that. When you say, I rented a car on a vacation and I ended up with no equity, no, but you had a car to drive. Okay, so you do the same for 3 years. The other thing to understand about a lease is there is an interest rate. It's called the money factor. So sometimes people think, oh, there's no interest on a lease. There is. It's called a money factor. It's important to understand what that is. What you're essentially doing with a lease is paying for the depreciation over the life of the lease. Okay. So with our same this is now just talking about lease. With our same $28,000 car, imagine that it's a 3-year lease. And at the end of the lease, we determine just to make the numbers really simple, let's consider that the vehicle has what's called a 50% residual value. That means that after 3 years, and this is based on a number of miles, assuming you don't drive more than, say, 12,000 miles, the manufacturer has calculated the vehicle will be worth $14,000 after the 3-year period. What you're essentially paying for the lease is the $14,000 in depreciation with the money factor added to it. That's basically what a lease is. This is why the payment is lower. When you finance $28,000, your loan is based off of paying off the full $28,000. When you lease, Your lease payment is based off of the amount of value that the car will lose while you have it, with this money factor, which is effectively like an interest rate added on to it. Okay. Many people look down at leasing because you have a payment and you don't own anything and it's a waste of money. Many business owners lease because it's fully deductible as a business expense. You don't have to worry about the sale, and it allows you to always drive a new vehicle. Consider all options. Not every option is always available to everybody. Explore the tax implications, decide for yourself. But very importantly, I would under no circumstance make your vehicle a high percentage of your net worth, nor a high percentage of your monthly budget. Neither is a good idea.